And we have got very few questions this week, but let's go through them and make sure that everybody's on the same page, and then everybody can get on with their holiday. So just FYI, right, I'm going to watch these futures markets today and see if, something looks promising for tomorrow morning. I do not shy away from the holiday, right? I do like trading sort of illiquid markets. If that makes you uncomfortable, then don't do it. Just take a day off, and you'll be better off for it. Never trade out of your comfort zone. All right, I've got my questions in front of me here. So we don't have any questions specific to XRV other than a couple people commented wanting to know, it was such a good week for us in the face of a very bad market for a lot of people. So why do I suppose that's the case? XRV benefits from volatility. That's a volatility-based strategy. It's gonna, as long as we are directionally correct, we're going to definitely benefit from extreme volatility. But over the course of the week, that thing definitely was firing on all cylinders. We had some good trades that developed later in the session. That's because there's basically a buyer strike going on in the equities markets. Nobody's showing up to pick these things up. We were short every one of those days, even though a lot of the pundits were pushing pretty hard that there was going to be a bounce. It did not feel on any of those days, based on the order flow, based on what was going on with with the markets that we were looking at. Did not have the feeling that that anybody was coming for any of these stocks. So that was good, right? We had lots of profitable downside trades. And the questions that I have are a lot of technical things. So, William, you are right on board with a conversation that I was just having via email with somebody. So, okay, William's got a question in the window here. I find myself crippled by indecision as to what type of order to put in: conditional orders, bracket orders, etc. So, if you're doing the XRVs, then on XRV you can. Typically I'll set those up as bracket orders, and as conditional orders, because I like to be able to defer them on the open. So what I do is I set those orders up the night before, and then, the fact that it is a second here. If I can figure out how to. There we go. So, my bias with XRV in particular is that based on the opening volatility, I might not want to take these trades. Now, if I set them up as bracket orders and I release them, right, the brackets are going to go active immediately when the market opens. Obviously, we've got nothing, nothing's going to be on that. Here we go. Here's a montage that at least has a little something on it. So if I'm going to set this up as an order for Monday morning, what I'm going to look for is the option then to do a conditional, and, let's say I want to sell short Apple at 150, say 149.80, or it's even lower. Let's say if it gets down to, like 149.50, I want to short the stock, right? So I'm going to set up either a day or a GTC order. Right, you don't want to use day plus. That's going to get you in the pre-market. But let's say you do a day order, and it's a conditional, and you say sell short. Right. The reason that I use conditional orders is I can use the price time trigger. I can say it's got to be trading above my price. Okay. So let's say it has to be trading at $150. And then if it gets down to 149.50, then I want to short its stop limit, right? So this tells me now that, I've got an order here, right, that I can put in. And then if in the morning I see something on the futures that I don't like, right, I can just come up here and I can change the order type. Right, this is actually the wrong order book to defer the order, but I can go and I can defer all the orders on the other orders screen. So this particular montage doesn't have the defer order here. But if you're using the one that I set up for you, you should have the ability in there to change it without having to do this. Okay, but if you right-click, you should be able to do a deferred order. Right, so now this is going to not trigger unless I tell it to trigger. So that's what I like about the conditional orders. The bracket orders I would use more for like the Baltimore chops and for trades that I already know I'm going to want to get into. So if you select bracket, right, and now let's say you have a trade in Apple that you want to do, now it becomes just a matter of, okay, I want to set up a stop limit order. If Apple gets down to 149.45 or 55, then I'm going to look to get short down to 50, right? So if I set up this bracket and I say short it, now I've got an order route that's already set up. You got to make sure here that these two match, right? That your expirations are, you can't have an expiration mismatch. So you have to make sure that these two are the same. So good to cancel, good to cancel. And then if I get in, right, I'm going to look to exit 100% of my position. And then I can either do a price or an offset. So let's just say that, I know that, I'm looking for a 50-cent stop loss, and I've got a $1 gain that I've got set up on this. And now if I place this order, this goes live and there's no condition on it. So that's the primary reason, right, that you're going to use a bracket order, is that the conditions have already been met, and now you just want your order to go live. And the nice thing here is, right, all of this is already bracketed up and ready to go, whereas with your conditional order, you have to add those other legs. So those are the differences. So, what this lets you do is pop your order in quickly on a bracket order in the morning, and then what the conditional order allows you to do is say, look, I need to have certain conditions met in order for this order to go live, and I want to be able to defer the order if the futures are messed up, and then I can put the orders in ahead of time. So let me see if that helps. Did that help you, William, with the deferred orders? Okay. And then, the other thing, if you still have a problem, just call me, huh? And yeah, Merry Christmas, you guys. Merry Christmas. I'll be happy to go through, some more of that stuff and just try to get it to be sort of second nature for you. NYSE Open Book is just, so, in the case of Apple's kind of the weird exception. Most things are only quoted on the Open Book if they are a big board listed security. So we can't really dig into it here because the market's closed, but during market hours, this would be populated with the order book as per the specialist on the floor of the exchange. So when you're in your real tick montage, the way that this works is you're going to right click in the montage, then you're going to click on quote sources, and then you're going to say show selected sources only, and then you would come down to NBK, the NYSE book, and that then shows you only what is on the specialist order book. See, so that wasn't selected here. That's why there was stuff in there, because the specialist, of course, is not there right now. The market is closed. So what it would show you during the day are the firm quotes as per the New York Stock Exchange. There's one specialist for every stock. This is his book. Whereas the level 2 screen just sort of shows you what's going on all the ECNs, what's going on, everywhere that there's a market being made in ABC, right? AmerisourceBergen is traded on ECNs as well as on the New York Stock Exchange. But the NYSE book during the day, Paul, is going to give you a good indication of where size orders are resting to buy and sell with the exchange, because to this day your bigger orders are still going down to the floor of the exchange. Okay, so hopefully we can go through some of those. Do you have OpenBook? Because you're not trading on no, the NYSE book is not. They don't fake order size, so you're going to see actually the real representation of what's going on the book. Okay, so I think you can subscribe to NYSE book directly from NYSE, because I think their constitution is a little bit different than NASDAQ. So the NYSE book you can subscribe to outside of your normal data feed. So I think you can just get it from NYSE. Used to be able to, so I'm not sure if now they require integration with a trading platform or not. But it's not expensive, right? It's only $20 or $30 or something like that, or $40 a month, and it does show you then the firm quotes on the order book. And then somebody had asked about, they heard me talking in the first hour trading pit about morning opens and big spreads and bidding the stock. Because you guys know, especially if you're listening to Goran and Rick, and some of the folks who have been around, let's just say not as long as Julie and I have been doing this, right, where we're sort of used to big spreads, or we were used to big spreads, right? We got a little bit spoiled, too, as time went on, and we stopped trading in eighths. Markets traded in eighths and quarters for hundreds of years, and then they added sixteenths, and then they were trying to get the spreads down. But generally speaking, we were always accustomed to, an eighth of a point. Your 12 and a half cents is going to be the spread. Never freaked us out, because back then, what you did was you bid the stock. You didn't just go and hammer the ask. And what I meant by bidding the stock was, let's say that, we wanted to get into Apple, and, say the spread was big, that we're like right on the open now. This is some other stock, not Apple, because Apple's always tight, but, let's say this is one of the stocks on the trading plan or on the XRV plan, and you've got like 150.10 by 151 and a quarter, and then right away you hear some of the guys in the room, holy cow, I don't want to, these spreads are too big, I'm not going to take that trade. And inevitably you hear me saying, okay, I'm bidding this stock, I'm taking it, right? Even though they're just hell-bent, they don't want to deal with the spread. What I mean when I say I'm bidding the stock is, if I'm looking to buy, right, I would put my price over here. So I would bid 150.10 and see if I can get filled, rather than going and lifting the offer, right? So you don't want to go, and if the spread is big, there's a bad example again because it's the weekend, but if this number here is higher, pretend it's this 165 number, right? You don't want to get filled way out of line with the current bid, because if you do, that means that immediately, right, if you go to sell the stock again, you're going to get killed. You're going to wind up, having to give up all the way down to the bid price. So these things tick on both sides of the tape constantly in the morning, and you can lock it to this bid, right? So you can go in and, depending on the order route that you're using, you are able to peg the bid and have your price stick to, whatever the highest inside bid is, or you can just go and hit the initial bid here and put your order there and wait and see if you get filled. But you know what I don't do is I don't sit on my hands because of a big spread. Like a spread does not scare me at all. So if I'm looking to get into the stock, I start working the bid side of the book pretty aggressively. You know, if the bid increases, I'm looking to increase with it, and you know, I'm avoiding on a bigger spread in the morning having to go and hit that offer because, like I said, I know ahead of time that if I do, now I'm going to be underwater if I have to get back out again quickly. So that's what I mean when I say I'm bidding the stock. Then as far as, you know, order flow trading, really what you're looking for when you're doing this, right, when you're going and you're bidding the stock, is you're watching the tape, right? You're reading the tape. Reading the tape and order flow is sort of, you know, it's pretty much the same thing. And you can either read the tape over here on this side in your real tick screen, right? You've got an active ticker tape going on here during the day, or you know, when we're trading these, and a lot of times what we'll have is an additional window, which is this time of sales window that gives you some more information, right? So if we go back to Friday, and we tell this to show us bid-ask data, right? Add new lines at top just means it's going to scroll, you know, it's going to tick in on the top. We're going to color code the prices, and we're going to show irregulars. So that's going to show where they're coming from. And we started at the open and ended at the close, right? So this is going to give us then, if it populates today, is going to give us a, you know, much richer view of the data than just this consolidated ticker over here. So this will show you where things are coming from. Are they coming in from ADFs, right? Alternative display facilities. Yeah, I guess this data is not available right now. But it'll let you assess where the order flow is coming from. Because if you get a lot of irregulars, especially on the NYSE stocks, right, that sort of indicates that things are coming in from dark pools, that things, here we go, right? So you're looking during the day. All right, let's go back around the market open maybe. Right, so here the market's open for trading for about a half an hour. Let's go back to the beginning. Okay, here we go. So here's your pre-market data, right? And you see there's, you know, there's Apple, so there's a bunch of ADF stuff going off, but there's also like this weird volume. And so if they're irregulars and they're marked irregular because they're odd lots, you just sort of ignore them. If you get into the morning, right, now all of a sudden they're going to go from all being irregular because they're outside of normal trading hours to, we're going to start seeing some regular prints right at 9:30. There we go. And, you know, you can see which exchanges they're coming from. So on the NYSE listed stuff, that's, you know, pretty helpful because you can see if somebody's trying to get something done from outside. You can see if they're marked ADF, alternative display facility. You can see if they're purple trades and they're marked irregular. If they are just odd lots, like I said, ignore them. But if you see an irregular that has a like an out of sequence tag associated with it, that means that somebody's waiting for, you know, price to come in, and then they're going to print some trades that they did off the book in a dark pool. If you see sweep orders, right, you know what a sweep order is. That's just so you've got an averaged out price. Got somebody who didn't care if their market order was going to get them the current inside price. ARCA, right? These are just ARCA trades. It's the Archipelago. right? EDX, these are all places that orders are shopped. So when you're reading when you're reading the order flow on these things, a lot of this information is really represented pretty well over here. So you do get in Realtick, you get the purple trades. That just shows you that it's this kind of thing going on. If you see a purple trade over here in the in this ticker, you can do the same thing. You're just looking to see, is it an odd lot? If it's not an odd lot, you can bet you can bet it's going to be an ADF, right? So if you get like look here, like here's an irregular posted 155.85, right? It's an out of sequence print, and it's you got 7 million shares there at 930. So that's pretty much the well, that's what you're looking for, right? Is that kind of a thing? But that's right at 930, so that's right at the open, right? And here is the offset on it. Okay, so here's your 155.85 trade in sequence, and then here's the irregular that's posted. So actually, I don't even know. Okay, I guess that's a cross. So you can read into all these things. Like you can look these things up, and then you'll be able to tell for yourself, right, what all these are. I'm not going to get into cross orders and OOPs and gap orders and all that kind of stuff, because it's really not that important for you to. It's really not important at all for you to know. But it's just this ticker gives you the condition of every single sale and allows you then to dig into the order flow. And the important thing to see in the order flow is how much is going off at the bid, how much is going off at the ask, how often are you getting big irregular trades that are out of sequence, because that sort of tells you which direction things are going, and then you just sort of monitor those big irregular trades and see, do they increase as the price is going up or as the price is going down, and that's sort of a tell that the market is giving you as to which direction it's going. As for the spreads, I think I already talked about that. If it's got a big spread on it, then my bias is, what I do is just go and, if I'm going to short, I offer the stock, I put it up at the ask, and I let them come to me for the short. If I'm looking to buy, I bid the stock, and I never give up the big spread. So I might increase the bid a little bit, I might lower the ask a little bit, but I'm not going and firing them off on the other side of a big spread just because I don't want this to, be an instant loser for me. And then some of you are having a hard time interacting with your trades once they're live, and what you want to do is just make sure that this is in Realtick, but you can do this in most software, right? You want to show your orders on the chart, and then once the orders are on the chart, you can drag them around here. So once the orders go live, you can just they pop up like a line, right? It's going to show up just like a horizontal line. It'll be solid in the case of Realtick, and it's going to have the number on there showing you the order number, and it's going to show you it's got the identifier, and it's got the price that something's going to happen, and it shows you, right, it's going to be a buy to cover order. And then if this is your stop and you drag it down into here, then it's going to, the next time that it ticks up into there, it's going to fill you. And then similarly on the montage, you can go and right, in your setup, you're going to go to user interface settings, and you're going to tell it to show orders, okay? And then the color is black in this case. That means it's going to make my order show up in the montage black. So it goes and it just, colors in this line with my order, wherever my order is, and then I can click and drag it around here as well. So you can interact with your order in a number of ways. The one that I prefer is on the chart, where you just drag the line around, right? Or you can go to the montage and find the black line that has your order, and then you just hold down your left mouse key and drag on it. Or you can go into the order book and right-click on it and change it. That's my least favorite way. Or you can go to the order book. You can double-click. That'll bring up your order, and then you can submit a change order. So those are all ways that you can interact with your order. And if you're somebody said that once these orders go live, they're starting to freak out a little bit because they don't know how to go and interact with it. The easiest place to interact is to have display attributes, show orders. This execution thing is sort of nicer after the fact. I mean, I've got mine showing because I've been looking at this thing so long, but it clutters things up a little bit and makes prices hard to see sometimes if it happens to be right on top of where your where your lines are drawn. So you can just turn that off and bring the executions back up later when you're a little bit more comfortable with the interface. Then we've got a question about the stocks to watch and why on the trading plan so for those of you who are on the regular trading plan, which I guess is everybody who's been to boot camp, right? Most of you know this, but some of you are newer, so let's just go through it real quick. There are, of course, 3 sections to every trading plan. This does not then cover XRV or anything else. Hang on a second. Okay, so let's say you're coming in through Daily Income Trader, right? You've got the NASDAQ Scalper and you've got the Around the Horn plan. Somebody else had asked about videos. So if you look down here, using the primary service, using stocks to watch, using radar, what does that asset allocation mean on the thing? All that stuff's explained in these Around the Horn videos here. But essentially, when you're looking at these plans, all right, the core section of the trading plan, this is set up as sort of a gimme, right? This is if it's on the Around the Horn plan, you can fully automate the plan and expect to get very close. You're never going to get exactly the results on the spreadsheet. Nobody is, right? Some of you are going to do better because you're going to get an entry that gives you a price improvement. Some of you are going to do worse because you didn't pull the trigger, or you didn't set it up right, or you got slipped on the way in more than somebody else. But generally speaking, you should be able to come very close to replicating the results of the Around the Horn plan, which is the only thing that we record, right? Those results that are on the site, those are just for the Around the Horn portion of the trading plan. And that's because you can set this up so that it just fully automates, not in Realtik, right? Realtik, you have to use Excel. You have to use some Excel scripting to fully automate it. But in TradeStation, in some of the other platforms, you can do things like, okay, here we have DK. It's a short. 33.98 is the entry, right? If this triggers, then immediately we're going to have a stop loss post at 34.62 and a target post at 33.09. So you could set that up with a bracket order. You could just have the bracket ready to go. Then, if it gets to $33.54, we want to move the stop from 34.62 to 33.98. We're going to move the stop to break even. All of that is like, you can totally automate all of this. It's a hard stop. It's a hard target. We know exactly where everything is. That's why that is the first section of the trading plan. Then you go down, right, it's replicability. Replicability is why that's the stands out on its own. Then you go to stocks to watch. So why is AER on the stocks to watch and not on the regular portion of the trading plan? And that's because when I went through on Thursday and I looked at AER, and I'm setting this trade up for the next day. Okay? As I went through and tried to identify what was going on, I'm looking at this thing and I'm saying, all right, my go line, right, my entry line, is going to be down here, $41.96. And as I look at this stock and I'm trying to put a stop loss in, right, I see $42.54. Now this is more like a target, right? So you want to make sure that this is like clear of these tops a little bit. Well, once you get clear of those tops, right, where do you wind up? You wind up right here, 42.63. So now I'm looking at this saying, all right, in order to clear these tops and have an acceptable, amount of elasticity on this, to get me a stop that says don't bomb me out the second that it touches here. It's got to force through. Well, then look what happened. It got me right into the next level of support and resistance. All right, so I cancel that, and then I come in and I say, well, where would it have to be for me to really be convinced that it's going to start moving? And now I'm looking at $43. Right, so I'm going 41.96 to 43. We know from the trading plan that I identified a target at $41.40. So when I'm going through and I'm setting this up myself, I'm saying, oh, 41.40. I've got a 56-cent target, but I've got over $1 stock. This one's upside down, right? Because on the NYSE stocks, I'm not looking at on the NASDAQ stuff. XRV, you guys know those stops initially, they're going to be really wide. On the NYSE stuff, NYSE, that specialist has these things bracketed up, and they tend to bounce where you think they're going to bounce. So, in this case, the reward to risk ratio is upside down. So then what am I saying when I put my plan together? I'm saying that in this case, right, the maximum stop that I'm willing to accept is $42.18, and that's based on a reward to risk ratio. So if you read the rules, what you want to do is you want to make sure in the morning that this stop is valid. And what that means then is the next day, right, so let's look at 42.18. Let's put that on before we change. Right. So in order to take this trade and have a reasonable reward to risk ratio on it, we don't want to see the stock violate this level right here. So this is an arbitrary level, right? It's a plug. The spreadsheet's putting that in when I'm putting the plan together at night. So in order to have 1.5 to 1 reward to risk, what it's telling me is I have to validate a 42.18 stop the next morning. So when I look at these then the next day, right, what we're doing is we're looking at price activity right out of the gate. So when this goes and it travels up to here, right, this tells us, look where it bounced, right where we thought it was going to bounce. Exactly where you would draw the line is that's the exact level, right? If you go to these lows and these highs, that's right where it turns it around. So the 42.46 line now becomes sort of a discretionary stop in my head. So now I'm looking at this, I'm saying, all right, 42.18 is where we want to see a stop. 41.96 is the entry, right? Again, so I'm too close to 1-to-1, or maybe I decide I want to take this, right? If I want to take this as a discretion, these are all discretionary trades. That's why we don't book them in the results. So as you're watching this unfold, right, you'll hear Julie sometimes say, listen, I'm going to use a 42.55 stop on this, and I'm going to take the trade, and I'm looking for wider targets. So she's talking about it in the room, whatever. I'm still looking at this. I've got a lot on my plate. So when I'm here by myself, like I was on Friday, right, I'm looking at this. Now it bounces in here, and I see it. There is resistance right at that 42.18 number. Happens to be the case that 42.18 was the closing price the prior session. That's not always going to be the case, right, because that's an arbitrary plug. Now it comes back. It does get above there. Comes back down. Dips into the, below here, 41.86, I guess is going to be the entry. Dips down in there. Comes back up. Now the 42.18 line holds, and now I've got a valid entry if it comes back down again. So I'm just looking for the reaction to this line, and it's not an absolute, right? So some of you guys are frustrated as heck when there's not an absolute something going on. That's a machine plug, and you're just looking here. So this might be, you might look at it and say, well, you know what? It gets up to 48 or 42.25 pretty consistently and turns around. So that's where I'm going to put my stop. That's what Julie's doing in the room. When she tells you she's got a different stop on those stocks to watch than what's on the plan, that's because this is a discretionary trade, and it's separated from the around the horn things. Are just, it's market opens in the morning. They are programmed. They go. Stocks to watch. You want to see what's the reaction to the 1.5 to 1 reward to risk ratio line, right? The 42.18 line. Then you can make the decision. All right, it's swinging up to here. I see that this level's holding. Do I want to take a trade and use 42.56 as a stop? Right? Is that going to be an acceptable trade for me based on what I see going on in the morning, based on the futures, based on the markets moving? And then once it gets down in here, now you've got your 42.18 line validated, and now you're really in business. So this one, if you're going to take it earlier, you're going to have to go and use this 56 because this did not validate. Right? So on Friday, you did not have validation of a 42.18 stop when the market opened, traveled up to 56, and then came down into this level. You didn't even have it the second time. It was the third time that it made this third wave higher that it just couldn't push up anymore. That's when you had an entry that made sense on those. So those are discretionary, and you want to separate them from just sort of your automated trades. So when you're going through and you're flipping through charts and you're setting up your own around the horn plan, you want to do the same kind of a thing, right? You've got your primaries, you've got your secondaries, and then you've got your totally discretionary trades, which are those radar setups. The radar setups are, the days that you're going to see those are when I find a stock. Let's say, again, the home builders are the easy example because they're easy to remember for everybody, right? Let's say that I see a home builder that's moving, but it's got a lot of support, right under where it currently is, maybe just about 20 cents or so. But then I look and I see, all right, so it's Beazer, Lennar, Pulte, Horton, Meritage, right? Everything is moving. Then I say, all right, well, that's a sector move, and I'm going to require sector confirmation in the morning, and I'm going to treat it as a scalp. So that's sort of the more advanced part of the around the horn thing. The easiest to follow should be the core, the around the horn plan. Stocks to watch, the second easiest, because you just have to remember to validate this one thing before you take a position. Validate that you've got an acceptable reward to risk ratio based on what's happening in the morning. And then the third would be the radar stuff. And then, let's see here. Question about DK and why my target was 3309, where you found a target around 3334. So if we look at DK, I could get snarky and just say because I'm so good, but I'm not going to do that. But sometimes that humor is lost on people who are getting frustrated with what's going on. So you want to go back and set your look back period. I use a huge look back on these, and here is right the low of below the day. Okay. And then you're saying you had a 34 target. So you're right in on these lows right here. So I mean, I can see what you're looking at. Whereas I was down in here. So I like And I'm not saying you're wrong, because you're going to be setting these up for yourself too. And the best habit to get into is to get consistent about where you're seeing support and resistance, and to start getting a feel for this stuff. I look at where a lot of highs, lows, opens, closes, things tend to overlap over time. I also look at the relationship, because another question that you had was about the pivots and the moving averages. I don't really look so much at the moving averages. I have them on in ITA, and I have them on in some of the sample videos, because a lot of institutional stuff tends to happen around those levels. But if you're coming in on the short side to let's say a 200 period moving average, and you see that as a potential bounce, then you also have to look at the context, right? You have to look at what's going on in the market. There is no bounce in the market. Nobody's coming to buy any of this stuff. This stuff's all just going down the drain. And it's one thing if you've got a smoothly trending stock that's moving higher that then pulls back to the 50 or pulls back to the 200, then yeah, you're expecting an inflection there. But if you've got a stock that's careening, on some sort of suicide mission, and it's just going straight down, then really your anticipation of what's going to happen at the 200 or what's going to happen at the 50s, they're going to sell it, right? So the 33, let's see, so here, 3309. So, one of the things that you have with your 3334 level is you do have 3327 is going to be S1, so that makes sense. For me, it's really, I go through and, I'm eyeballing things, and I guess it's just, for me, this back here was more significant than this, and it's probably just because we've got a firmer set of support and resistance areas here than we do here. This is sort of a cup, sort of a loose support area, and I wound up picking 09, and you wound up picking 34. But don't get too hung up on you're not at exactly the same. If you picked 33, 34 right there, I'm happy. Right, I'm happy that you're seeing that, because that's definitely, you're looking at support and resistance, and you're seeing support and resistance where you should see it. And then, so you're asking, what is support when it's still mysterious to you? Yeah, it's the floor trader pivot line. So what you have to imagine is, right, Julie and I started trading before there was really charting software that was available, right? So you weren't trading with the benefit of real-time charts when we were just first getting our feet wet. It got very quickly. Real-time charting was a real thing for us. As the internet connections got better and software started getting better, you had access to the charts for all this stuff. Well, what you could do, though, was you would set up floor trader pivot lines, because that's what the guys on the floor were using, right? That was their cheat sheet. Central pivot is just high plus low plus close divided by 3. Let me see if even in the help menu here they don't have, that would be useful. Let's see. No matches. So, because that's just on this page. Hold on. Here you go. So they've got the pivot lines, in what's not a fantastic explanation here of why they work or anything, but you can see the central pivot, the red line, is the high plus the low plus the close divided by 3. Then the blue line, which is R1, that's 2 times that central pivot minus the low. Right? So if you're trading today, it's minus yesterday's low is where that line is coming from. The green line is 2 times the pivot minus yesterday's high. That's your support 1. and then, R2 and S2. These formulas, they look totally arbitrary, but you'll see stocks bouncing around those pivot lines, especially when you have confluence with support and resistance like you did on this. Right, so that's the other thing. Don't get too hung up on what the pivot lines are, because I think it's just important to accept that they are, right, that they exist and that people are watching them, right? And you can see here, even though price wound up making a move through, look here at what happened at S1. It came down, it bounced, right, hung around S1. Then when it finally broke through, the way that you used to trade these things on futures contracts, on stocks, whatever, is that your assumption was if you got through a pivot line and stayed below it, your next target was the next pivot line. And that's exactly what happened here. Look how it bounced right off that 32.22 pivot. Comes back up again, comes through. Now, we don't plot, Realtek doesn't plot the third level of pivots. There's, you can go about R3, S3, but, you can just sort of gauge by looking at the span between these where they would be, right? And you can see that, if we had the next set of pivots plotted, right, that's pretty much where it wound up going. These tend to be pretty equidistant. But so generally speaking, I mean, if you're looking at where tomorrow's floor trader pivots are going to be when you're setting up your trading plan, then the important thing to focus on is, does that pivot line overlap with prior support and resistance? So you're on the right track. Listen, I got your questions, and I said, she's getting this. So that's super cool. I know, like, in your head, it's frustrating because you have these questions, but I'm really, really happy about the questions that you sent in. Okay, and then our stocks to watch always the case of a yeah. It's about I couldn't find a suitable stop, but what was happening with price over the course of the day was telling me it was likely going to be a good trade, right? So you've got a really strong, persistent trend. It's just when you go and you look at the data, right, you can't find a place to say this is going to be, right, this is going to be a stop, or this is going to be a stop, or this is going to be a stop, right? You keep looking at it saying, well, but if this is my stop, I should really be up here. And then you get up there and man, it should really be up here. And before you know it, it's getting away from you. But you're looking at all this and you're saying, this is really, the tape on this thing is just nothing but persistent selling. Look at the way this, you look at the way the volume's building over the course of the session. You look at the way that the selling goes into the close. It's a picture-perfect setup. The only problem with it is, when you get this real big blast into the close, it's just hard to figure out, where should my stop be? But that doesn't stop you then from putting it on the table for the next day and saying, if it sets up, I want to take that trade. And, some of you who are newer to this stuff, you just, keep it all in mind and just integrate it as you go. You're going to get comfortable with it as time goes on, and that's really what's important. It's not about you have to do everything every single day. It's about add layers of complexity to your business as you start to get things under control. So somebody else had sent a question saying, what do you do when you get frustrated? Well, what I do when I get frustrated is I go and shake things up a little bit, right? I'll take a break from it for a couple of days. I go skiing. I go, I put down whatever strategy that it is, and I shift to something else. So let's say that I'm super focused on XRV, and all of a sudden I'm having trouble moving my stops around. I'm having trouble seeing things. This still happens to me 22 years later now. And then I decide, what, I'm gonna go, it's time for a little brain enema. I go skiing, I shake it up a little bit, then when I come back, I'll focus on Baltimore Chop. And I'll just leave this one aside for a couple days and say, I'm gonna shift the focus to one of the other strategies that's in the first hour, because I like the first hour trading, right? Julie likes the slow and steady wins the race stuff. I like the first hour stuff. I would not in my wildest dreams ever limit myself and say, I'm only going to trade Baltimore Chop, or I'm only going to trade XRV, or I'm only going to trade Apple, because I already know, for me, that's a recipe for things getting frustrating. And what I want to be able to do is sort of rotate through things, shift my focus, automate some of it as much as I can, focus on the other thing, clear out the brain space, and then you're going to see that frustration's going to go. You're going to be frustrated now just because it's new to you and things don't work the way that you think they should. And by the time you've been doing this for a couple of years, you're going to be like, well, things in this business never work the way that I think they should, but they work, and that's what's important. I can make a living at this even though it seems to me that this is really stacked against me, right? That was John's comment the other day. John was very frustrated with Apple. He says, man, oh man, it's like every time I get in, the market does exactly the opposite of what I think it's going to do. And, I said, that's because you're doing kind of the opposite of what I showed you to do in the first place, which is to anticipate the stuff coming at you, right? When you see that you're doing discretionary trades and every one of your discretionary trades is wrong, to me, that's not a problem. That's a system. I already know, right? In my head, that's how some of this stuff came to be. I thought it should be doing something, and then I saw that every time that I thought it should do something, it did the opposite, and I was like, well, that's not a problem. That's a system. I just have to do the opposite of what I think is going to happen, and I'm off to the races. That has been very uncomfortable for some of you psychologically, right? Jesus, the stock is moving up, and we're looking for a short at the pivot line. Why would I do that if the stock's moving higher? Why would I go and fade, right? And because I'm looking at this. I'm looking at the resistance that was overhead here, and I'm saying, all right, on Friday, if this comes back up and it hits that pivot line, I'm going to short the stock. Even though it's, if it was moving higher, I'm going to short it right there because that's the uncomfortable thing to do, but that's the thing that makes sense in light of support and resistance that I see in the prior day, right? And it's no different for Apple, right? And some of you, you're just really over trading this thing, right? So on Friday, when I was waiting for this to happen, it's coming up to where look at this support, resistance. Now remember, this was not the pivot line on the 20th, right? On the 20th, the pivot line was based on the 19th, right? So when you look here, all you're looking at on your data from the 20th is, where are things aggregating, right? Where's the support and resistance? And then you come into the 21st. Oh, look at that. It's like magic, right? It goes and it trades right up to the central pivot line, which happens to be confluent with a 57.94 support and resistance line. So why did I short it in the first hour trading pit on Friday morning here, right? Instead of, I don't really, this is something we need to talk about because you're telling me that you had, 7 trades and we were only 4 bars into the session. I kind of need to know why you're not waiting for things to set up. You're just waiting. You got to look at this and just say, look, all this stuff is going on, yeah, and I've got all sorts of places that I think this might go. But when we open for trading, first thing in the morning on Friday, what I'm really interested in is, look, it opens, it travels down through, tough luck, I missed this stuff. But this one I'm looking for, and I'm waiting for. And when it gets up here, right, and it hits here, I'm going to take that trade, I'm going to put my stop up, right, above these highs. It's going to be my test. Next bar goes, reverses, and you've got a beautiful move on the morning. But if you're looking to fire off trades because you think you're missing something, you just got to, take your hands and put them under the chair. Because I can guarantee you, you're telling me you did 7 round trips in 3 bars of trading, and you don't understand why, it's constantly going against you. I can tell you exactly why it's constantly going against you, because you're doing something based on your hunch or intuition or, worse yet, gambling. What you need to do is focus on, where are the bodies buried? Where do you think there's going to be a significant inflection if price gets there? And then you're off to the races. Okay? All right, so if that is it, think I answered everybody's questions, right? And if I didn't, you'll call me. But if that's it, then we are done. That wound up taking an hour after. It always takes an hour. So we never get out of here early. But hopefully you guys are, feeling a little bit better about some of these questions than you were when you came in. And we are going to see what happens with the futures. I'm not going to release anything until later tonight. Things sort of, for a holiday session like tomorrow, we really need to see things line up, exactly. But it tends to be a good day. These pre-holiday and post-holiday days tend to be low liquidity, and they tend to be pretty easy in terms of range of motion. So let's see where we are later on tonight. All right, you guys, have a great one. If I don't see you tomorrow, Merry Christmas. I want to thank the anonymous gift basket senders. That was really terrific. Thank you so much. And signing something to your students, I think, is really great, and the kind words were very appreciated. And I think we're going to be eating some pears and some cheese for the next 2 months here, based on what we're looking at. But thank you. It was very kind of you. All right, so have a great one, and if I don't talk to you, like I said, Merry Christmas, and we will definitely catch up with you this week.